Hello, everyone. This is Susan Gibbons, publisher of Auto Success Magazine. I would like to thank you for taking the time to join us. Today, our presenter is Doug Austin. Doug is a 4-year veteran of the United States Marine Corps. He is a graduate of St. Thomas College. His professional experience includes 16 years with Northwest Airlines as Director of Purchasing and Systems Stores. He also served as Director of Purchasing and Logistics for Wilson's Leather Experts and Vice President of Operations for Ergotron. In 1992, Doug started StrategicSource, a consulting practice in spend management and purchasing. Doug is currently the president of StrategicSource, the industry-leading expense management consulting company for automotive dealerships. In this webinar, Doug Austin will share tactics that generate immediate financial impact for your business. In addition, he will provide estimated spend and recommended strategies to achieve those results, including pricing strategies, business terms, and so much more. But before we get started, let's go over a couple of housekeeping items. During the webinar, if you think of any questions, please type them in. We're going to hold all the questions till the very end. The way you ask a question varies depending on the device you are using. If you are using a laptop, desktop, or tablet, there's going to be a GoToWebinar frame on the right side of your screen near the bottom, and it'll say questions. Just click the triangle to the left of the questions. It'll open up a box, type your question, hit enter, and your question or questions will be submitted. Now, if you are on a mobile device, they are all a little bit different. You will either have a header, a footer, or a picture frame around your screen. Somewhere on there, you'll see a question mark. Just touch that, and it'll open up for you to type in a question. Sometimes you can swipe to go back to the webinar, or sometimes you look for a second icon that looks like a flat screen television. Just click on that and it'll bring you back to the webinar too. Now, for any reason, you click on the wrong button or you get kicked out of the webinar, just use the same link or number that you used to join us. It will bring you right back to us. A couple more things I just want to mention before we get started. If you haven't been to autosuccessonline.com lately, we have a ton of new content. Just once you're there, go through some of our past websites or past magazines, sign up for our newsletter, listen to some podcasts, view some blogs. You can also see any future webinars or past webinars. Now, I'm sure you're sick of me talking. With that being said, we want to get this presentation started. So Doug, my friend, please take it away.
Well, thank you, Susan, and welcome everybody to the webinar today. We're going to talk a little bit about expense reduction opportunities. That is going to be some tangible information that you can bring back to your dealership and cut costs now. And then we're going to talk about some best practices and why those are relevant. Is we want those cost reductions to stick. And if you've got the right infrastructure and the policies and the processes in place, we can make those cost reductions stick. So we'll kind of touch on both of those. But with that, we'll get going. I think Susan kind of talked about StrategicSource. We're a spend management company, been around for a long time. We've got experience in about 130 expense categories. And I would say that that experience is probably now up around 170 because we're also looking at revenue opportunities as well as audit and recovery. What we'll cover today is profit improvement opportunity, some effective strategies on the spend management side, some best practices, supply and service cost reductions, and then some ideas for you to consider on the revenue and audit side as well. With that, I think Susan's going to ask just a few poll questions, and then we'll see what those results are and talk about those as well.
Yes, sir. So for the first poll question, what percentage of revenue is your dealership producing compared to June of 2019? Let's give it a couple seconds and I will let everyone know the results. So the percentage of revenue that that your dealership is producing compared to June of 2019 is between 50 and 70%. Very interesting. So let's do another poll question. How much do you think you can save on your indirect expenses? So I know this question's been pretty heavy on all of our minds lately, and the results of this poll are 0 to 10%. 75% of us thought that. So let's do one more last poll question before I kick it back to Doug. Do you consider your spend and supplier management process optimized? The majority of us think no. Doug, I'm going to hand it back over to you. I'm so interested on your thoughts with these poll questions.
Yeah, good point. So we've got a number of clients all over the country, and my client service team and I met 2 days ago. And it seems like the majority feel like revenues are coming back, but they're certainly not at the levels they were in February. And but there is some optimism that they're trending the right way. The second poll question that was asked is, what do you think the opportunity is in cost reduction on supplies and services? And really the answer is 25%. I think most of you said it's 10%, but there's a group out there, a research group, been around a long time, called Aberdeen Group, if you want to look them up. They say that if you will centralize procurement and control all your indirect expenses, you can save as much as 25%. In the past 10 years, we've been averaging around 24%. And most recently in 2019, we found that we did 1,780 projects for clients last year, and we averaged 29%. So 24, 25% is a legitimate target. And the last question having to do is, do you think your spend management processes and controls are optimized? I think the answer was the majority felt no, and that's usually the case. We've got some best practices here today that we'll make available not only in this webinar, but you can get a hold of our Director of Marketing, Dan Driscoll, who's on the line, and Dan can share a best practice tool with you when we're done. So you'll have an opportunity to review that and tackle that and see if you want to get those in place. Again, cost reductions can sometimes easily be obtained, but the trick is, how do we keep them? How do we keep them long term? That's what we're going to talk about today. Why this matters, how you'll benefit. We're going to talk about expense reduction, because expense reductions goes right to the bottom line. It equals profit improvement. We're going to talk about saving time, about improving efficiencies, and importantly, reducing supplier risk, improving your control. Ultimately, you want to have fewer suppliers, fewer contracts to manage, and that will make life easier. Just as a sense of opportunity out there, we're using some pretty conservative data here. But if you're a $25 million dealership, you're probably going to be spending 7.9% of your revenues on supplies and services. You'll see that we use research. We've got a number in there of 22, but we, in this case, estimated 18%. So that says a $25 million dealership, if once they get through all their categories, could pull out about $354,000. The question is, how many cars do you need to sell to generate that kind of net? Maybe you move up the chain, a $50 million dealership should be able to save about $609,000, $714,000 for a $75 million store. And for a $300 million group, the numbers start to get pretty, well, they're all interesting, but they get pretty compelling at 4.1 million. So we're using pretty conservative estimates here at 18%. And keep in mind, last year we averaged 29%. So the opportunities are there. What does a highly effective spend management group look like? I'm not going to read all of these, but if you look off to the left, mission and scope, cost and profit impact, all of these things. We won't talk about what's ineffective because everybody kind of knows that, but an effective strategy is that you're controlling those 130 categories, that you're reducing your spend by 20%. You have a sourcing plan. You focus on long-term pricing or least total cost. You focus on high usage items. You know, in office supplies, that's probably paper and toner. That's where the majority of the spend is. On the supplier selection side, you want to be able to have the same suppliers across all stores, not everybody doing their own thing. You want to have a narrow supply base. You want to have policies and improved controls in place. You want to have compliance audits for certain suppliers and uniform, DMS, telecom, those high spend categories. And you want your people to be highly trained. That's what an effective spend management strategy looks like. This is what ineffective looks like. We won't spend any time there right now. So what are the benefits of an effective spend strategy? Well, as we talked about, you can save 15 to 25%, fewer suppliers, fewer invoices, price and term compliance are measured. You'll have sustainable savings rather than short-lived savings. Your business terms will be quoted, they'll be negotiated. Your processes will be optimized as well. So, and what does that translate to? Well, it translates to cost savings, improved profits, and certainly simplified business processes. So let's talk about this best practice assessment. Dan Driscoll can get this to you if you're interested. But if you look at the 15 elements here, what we'd suggest is you get a hold of this and just answer honestly. Is it in place? Are you, maybe it's partially in place, or if it's not present at all, check that. And we'll show you an example at the bottom. But all of these things should be in place. You should have a purchasing structure. You should have policies, resources, objectives. You should have spend data. You should have a sourcing plan, a defined process. You should be managing your contracts with a contract tracker, a supplier management process. You should be managing the supply base. You should be using POs for all of your commitments. You should have terms and conditions, payment process controls, so we're not paying phony suppliers out there. And then we ought to have audits in place to audit the high spend vendors. But that's what constitutes best practices. This is just an example of one filled out where people have either graded themselves or we've graded them when we've done interviews with clients, and we put some comments off to the side. And what that yields in is a graph that really says, well, here's all the best practices at the bottom. Anything that's in red, we need to fix. Anything in orange, we need to tweak. And anything in green, we need to leave alone. But this is a kind of a quick overview of your organization if you take it and are honest with your assessment, and then you know what to focus on. Again, what we're trying to do is get best practices in place so that savings stick and profitability improves. 5 levers of expense management. We created this a number of years ago, and I noticed about 4 months ago that some people co-opted this online. They even sell this chart. So if you wanted to go out and buy this chart, you can pay somebody for it, but in one of the templates. But this actually came from us. And this really talks about how do you source a category. It's an alternative that we developed. Well, there's really 5 levers that you want to look at. You want to look at your business requirements. What do I really need? What are the specs? What are the frequency? Do I really need a 6-yard container dumped 5 days a week for my waste. Maybe I really need a 3-yard dumped 3 days a week. So get to the requirements rather than just requote something. Challenge the assumptions that went into it. What does the best solution look like? Should I have a list of high usage core items that I negotiate the pricing on most often? Do I use one supplier or do you use multiple suppliers? Let's go over to the financial side. What are we trying to achieve on price and terms and delivery? And are we trying to get long-term pricing in place? That's the financial lever. On the process lever, we want to look at acquisition, execution, and payment. This could be relative to credit card processing. You process a credit card transaction, you want to make sure you collect all of the information so you don't get charged more by your merchant processor. So that process is very important. And then how do you pay your supplier? That's very important. If you pay them with a credit card, you're going to get some cash back. And then finally, what does compliance look like? One, are the employees internally using that supplier? Well, they should be. Two, is the vendor adhering to all of the requirements that they agreed to? And lastly, are we using the core items, or are people straying off the core list and buying items that are more expensive? So that's the 5 levers of expense management. You can apply that methodology to a supply or a service, but ultimately it's going to lead to improved efficiency, effectiveness, greater control, greater profitability, and sustainability. And I think that's what we all want. We don't have an unlimited amount of time to go out and source office supplies 4 times a year. Let's do it right the first time and then not have to mess with it for 2 years and then come back to it in 2 years and do it again. But if we take that approach, we're going to be a lot more efficient. So now let's talk, we've talked a little bit about theory and best practices. Now let's get into some real nuts and bolts here that can help your organization. We're going to talk about some categories specifically. First one up is office supplies. If you look at this chart, I'll walk you through this because you're going to see the same format for multiple categories, but we've quoted a $50 million dealership and sales revenue, 100 million, 200 and 500. We've got tons and tons of benchmarks. So our benchmarks tell us that a $50 million store will spend probably around 19,000 on office supplies annually. 57 for 100 million, and you get it. The savings target here is 16%. Where does that come from? Well, we did 1,780 projects last year, and that's what our sourcing team pulled out on average on the office supply category, 16%. So if we use that number, this is what the savings opportunity would be at different revenue levels, between $3,000 and $30,000. Now, some strategies. Again, this template will be repeated, so if you understand what we're doing here, you'll understand the other ones as well. We first started this when COVID was at the front end and there were a lot of discounts available by suppliers. I would have to say most of those are not available anymore because business is starting to snap back. But relative to price, you can always renegotiate and you can always quote office supplies. In terms of business terms that you should ask for 210 net 30. So you can get a discount for paying early, and you can always ask for paying with a credit card. Can you get fixed pricing for 12 to 24 months? Yes, yes. We would suggest that you focus on a core list of high usage items, that you try to consolidate to a primary or preferred vendor, that you sole source where possible. I'd request a rebate, a volume rebate from your supplier, maybe 5%. All they can do is say no, but you might end up with a 2% rebate, so ask. There are some vendors out there, office supply vendors, that if they earn your business, will pay you a signing bonus for larger accounts. So don't be afraid to ask for that. So here's some other advice in this category. Get a usage report and get that in Excel. You can build an RFQ right from that usage report. quote the category, analyze the results, determine your 200 high usage items, we call those core items, and negotiate those hardest, finalize your analysis, negotiate any discount off list on non-core items. So maybe there's 200 items that you're going to use every day, but there's 300 items that you're going to use infrequently. Well, we suggest you negotiate some discount off those. Advise your suppliers and thank them for participating, and then implement your solution. So that's what we think you can do on office supplies. There's good opportunity there. Now let's go to shop supplies. Same format, same revenue bands. Spend is estimated here. Savings is estimated about 14%. Your target savings would be in this range. Your strategy is certainly you can renegotiate with your suppliers. You can quote. You should try to get, again, the terms and pay with a credit card. You want to limit your suppliers to high use or supply choices to high usage items. Get down to one supplier. There should be no reason why one good shop supply vendor can't provide all your needs. You don't need 3 or 4. And if you're a multi-store group, you certainly don't need 5 or 6 vendors. Rebate programs are available with these folks, so ask. You might consider in a shop supply engagement client managed instead of vendor managed. And what I mean by that is where you are placing the order for supplies, not the supplier. There's a lot of honest suppliers out there, but the reality is when business is slow for them, they tend to jack up order quantities, and you end up with bins fuller than they need to be, more product in there than needs to be. And if you doubt that, go take a look in your shop and just wipe your finger across some of the parts in the bins. If your fingers come up with a lot of dust, you know your vendors are oversupplying you. So advice, again, get the usage report, get it in Excel from your vendor, build an RFQ out of that usage report, quote it, determine your 200 high usage items, finalize your analysis, negotiate a discount off list, advise your suppliers and thank the ones that participated, and then implement. Janitorial supplies, same concept. Here's the spend, here's the savings target, here's the dollar target. Again, core list, narrow your supply base. There are rebates available with a number of janitorial suppliers. There's an opportunity too to buy your janitorial supplies and your office supplies from one vendor so you can consolidate. If you are getting janitorial supplies provided by your janitorial company, my advice to you is have them quote the supply portion separately from the services. Most janitorial service companies will jack the price up on supplies if you don't ask what they are, and that turns into a big profit center. So split it. Quote the services and quote the supplies separately. Let's talk about some service opportunities here. Uniforms and laundry, a favorite topic for most dealers. They love their uniform companies. Let's see the revenues on top. The opportunity is around 15% typically. You can see what the dollars are. Again, focus on high usage items. What does that mean? Well, it's usually shirts, pants, jackets, shop towels are usually the high usage items. Then come rugs and mats and things like that. But get those prices right and don't let them snowball you by giving you a great price on mops while they take advantage of you on shirts and pants. Again, look for any redundancies in your suppliers. Rebates are possible. Weekly service fees, insurance programs are costly, and they can be negotiated out of an agreement. You shouldn't be paying wastewater treatment charges. You shouldn't be paying weekly service fees. Negotiate that stuff right out of the agreement. And again, insurance programs they're handy if you've got a thin management team and can't keep track of things, but if you're paying an exorbitant price on those insurance programs typically. Our advice here is look at your contract end dates. If you're more than 50% of the way through your agreement, if you're at month 19 of a 36-month agreement, I can't guarantee it, but I would pick up the phone, call the supplier, and see if you can renegotiate. They're under no obligation to do that because you're under contract, but they're also interested in preserving their revenue stream. And if they can get another 3 years out of the deal by renegotiating, that'll sometimes work. So give it a try. Finalize your prices with once you're renegotiating. I would again try to get some benchmarks from other dealers that you know or folks in your 20 group so that you know what a good price is. The best way to get that is to quote with suppliers and renegotiate. Finalize your analysis, make your decision, again, advise suppliers and thank them, and then implement your program. Let's look at credit card, merchant processing. About 10% is your target. Here's what your dollar opportunity is. Your quoting and negotiating opportunity and strategy is here. You want to look at all fees, report fees and data fees. A lot of those can be negotiated right out. Sometimes credit card companies will give you a low transaction fee and then stick you with a bunch of reporting and data fees on the other end. And that's where they get you. So you want a simple statement. You don't want any excess accessorial charges. You can't control what the interchange is. That's determined worldwide and countrywide, but you can control the profit margin that's added to that interchange rate. So again, look at your contract end dates if there is a contract. A lot of those nowadays are becoming they're moving away from contracts. Attempt to renegotiate. See if you can finalize new prices if you're renegotiating, or quote with suppliers to get some competitive information. The best way to find truth in the marketplace is to go out for quote. Finalize your analysis, make your decisions, and you know the drill from here. Credit bureaus. This is a fun one. This has got really a two-component angle to it. The one is the price you pay for the bureau, and two is really the process that you execute that credit report on. Typically, the pricing is about 31% high. When you look at the process elements of it, i.e. dealers are sometimes take the easy way out, and instead of pulling one bureau and hoping for the best results, they just pull three at the same time. And I can't tell you how many times a GM or CEO has told me, well, we don't do that. But if you pull a usage report from your bureau provider, you'll see it real quickly. And a lot of management just isn't in touch with what's going on. So again, pulling too many bureaus is costing you money, and the rate you're paying is probably costing you money too. So there's a process and a price component here. So try to eliminate those double and triple pulls. Make sure you're using the lowest cost bureau first before you use the highest priced bureau. Now, some of the banks have a say in that, but at least be cognizant of what the strategy is. But the savings here can be pretty significant for a small store and for larger groups. Let's talk about health insurance. We have suppliers that we work with, and again, we don't take a penny from the suppliers we work with. That's our model. But we have some that work with groups that have more than 100 employees. The opportunities there can be astounding. We found one of our clients the other day had $1.3 million opportunity on healthcare savings alone. 1.3. So what is that? $110,000 a month in cost savings. For groups of 100 or less employees, there's different strategies, but there can be some good savings out here. 36% is what we averaged last year. Given the healthcare bills that we all have, I have as well for my company, this is pretty darn attractive. So in terms of strategies, you might want to, if you're greater than 100 employees, self-funding might be a good option. But again, there are other options if you're not 100 or more employees. Review your contract end dates. Level Funded is a group that we've partnered with. In fact, we invited them into our booth at NADA, and they've done a great job. They need about 6 months to look at your data. Any broker, whether it's Level Funded or not, will want to get a broker of record agreement. They're going to do a lot of work on your behalf, and they just need to know that at the end of that assessment, that you're just not going to hand that to your broker friend or somebody else. So they want to, usually the cost of the engagement is simply a broker of record signature, whether you use Level Funded or anybody else, but that's the fair way to do business. But there are some really good opportunities out there in healthcare. Let's talk about some revenue opportunities. Some that can add sales, gross profit opportunities to your business. We have had some extraordinary results in the past 24 months with paintless dent repair. Now, there's 2 strategies you can do here. One is, I'm sure you're doing paintless dent repair in your business. You're probably bringing a vendor in to repair dents on your cars on your lot, and you're paying them a fee. Well, if you're doing that, you can quote and renegotiate, and there's about a 15% savings. The other opportunity is to take that in-house and start providing paintless dent repair services to your customers that come on the service drive. And we've got some suppliers that will train your technicians in vehicle reconditioning. They can help spiff the management and the technicians to get, make that business hum. If those technicians leave, some of these vendors will agree to retrain, come back and retrain. Ding King is one that has a warranty to retrain for free if a tech leaves within 5 years. So on the other hand, for dealers that want to bring this in-house as a revenue source, the revenue dollars can be pretty compelling. And again, it's adding to sales and gross profit. We've got a number of our clients that are going through this right now, and if you haven't thought about it, I encourage you to at least dig into it. Another one is auto glass. Same kind of strategy. You're probably hiring multiple vendors to come in and replace glass and cars on your lots. The opportunity just by renegotiating or requoting and narrowing that supply base is about 16%. Again, these dollars go to gross profit. Another thing to consider here is to become a glass replacement supplier yourself. So there's a couple of OEMs that we're aware of that is pushing this across their franchises. And there's a number of dealers that are, rather than send that business down the street to a glass replacement house or bringing them on your lot and paying them, is that you become that glass replacement company yourself. There's a big mega group down in the southwestern United States that has done this. They've got their own glass warehouse, they've got their own trained techs, and they don't spend a cent with an outside glass company today because they are the glass company. So think about that. Purchasing card. Well, this is based on, this is paying, it's a process improvement, but I would imagine most of you are paying some suppliers with a credit card and getting a rebate back. You can get a rebate between 1.25% to 1.8% cash back for vendors that you pay. Many companies are using a credit card, but using it in a very minimal way. And our advice is that you should be paying at least 40% of your suppliers, 40% of your spend dollars with a credit card. And we've seen that go as high as 72%. You can use American Express at 1.5 cash back. You can use some Visa and Master at 1.25. if you've got a relationship with your bank or your floor plan lender, I've seen that go as high as 1.8. So think about accelerating the amount of vendor payments you make on credit card, because it's going to throw off cash. It's easy to audit, and you know the dollars are in your pocket. It goes right to net profit. Well, we've covered expense opportunities. We've covered some revenue. Now we're going to talk a little bit about audit and recovery. What does that mean? Well, inevitably, you have paid suppliers to do things for you, be it health insurance or transportation, or many other categories, even F&I insurance. And sometimes those vendors overcharge you. And the way to get those dollars back is to do an audit and recovery solution. In some cases, it may be you paid too much in unemployment taxes, or you paid too much in property taxes. So there are multiple opportunities out here to chase those dollars too. And we'll just talk about a couple of them. Employment tax overpayment credits. If you've had an acquisition in the last 3 years, you may have paid more taxes than you're obligated to. You can recover these expenses, and what we've seen so far from the groups that have taken us on is about $46,000 per rooftop. So there are some conditions here. It doesn't work if the acquisition was in the first part of the year and the prior, employer didn't pay much of the taxes. But take a look at that. Your accounting partner should have some ideas on this. And if you are interested and just unsure whether it's applicable to you, reach out to us. We can give you some information, and we can connect you with the suppliers that we work with. We try to identify and vet at least 2 suppliers in every one of these categories, and we might be able to provide some assistance there. But unemployment or employment tax overpayment, rather. The other one everybody's doing, transportation, shipping, and recovery. There are opportunities out there to recover spend that the carriers are obligated to provide back to you if they miss their delivery windows or their delivery terms. So what we've experienced is about 3 to 7% of shipments don't meet the agreed upon terms. When that happens, you're eligible for a full refund. You've got to have that refund process in 15 days, and a lot of times they're rejected the first time. And most companies don't have time to do that. So there are companies out there that will do that for you. You can see here our sourcing team put some estimates together. $50 million group might pull in $1,600 a year. You start to get, you're doing a lot of shipments. You start to look at those opportunities. It's just found money, and it really doesn't cost you anything. It's usually a gain share program where you're getting 50 to 75% of the benefit, and the audit company is getting the delta, the difference. Really doesn't cost you anything to sign up, but it's a good way to keep your suppliers honest and put some dollars back in your pocket. So we've talked about a number of categories here today. Hopefully you're all still awake on the other end of this. I know this is pretty exciting stuff, but quite honestly, as we come out of COVID, profitability is kind of exciting. In fact, it's imperative to the sustainability of our businesses. And there's a lot of levers we can pull, a lot of buttons we can push, strategies at a high level and tactics at a lower level that we can push to wring more profit out of the business. I hope we've given you some ideas of that today. But remember, there are opportunities to cut your costs by 25%. Is it easy? No. Does it take work? Yes. But there are plenty of ways to do this. If your annual spend is X, you can plan on at least 5% of that going into supplies and services. You've got 130 categories to manage. You're going to need both short-term and long-term strategy to enhance profitability. We've given you ideas today on about 14 of those. It's a good time to get started. There are tangible results on the other end of these. There are plenty of other categories that will have even larger results, but we wanted to give you some takeaways here to get you started. Again, my company, StrategicSource, is a profit improvement. We've got a profit improvement program. We help companies do their analysis, their sourcing, put all the tools in place. We will guarantee ROI from 3, 6, 8 to 10 to 1, depending on the opportunity. That's how confident we are we can help. We have another company called Expense Edge. It's a portal-based purchasing program it's actually about 80 now, pre-negotiated solutions, about 10,000 price benchmarks are right there. So if you didn't want to hire an outside company, but you felt you needed data in order to make smarter decisions, Expense Edge would be the right solution for you. We have solutions that are ready to go, but if you don't want to change suppliers, we've got benchmarks that are there to help you. We'll tell you what that uniform shirt should cost, or what that office, that stapler should be, or what that wheel weight should cost. We've got the benchmarks. And if you're interested in learning and being more effective in spend management, if you want to know what our sourcing team knows and be as effective as those people, well, we can train you in that too. StrategicSource Learning, we've got 3 modules. We can get you from a novice to a pretty effective sourcing person, even running a spend management organization. So we can help you there. If you'd like an estimate of cost savings at your dealership, shoot us a request. You can email that to sales@strategicsource.com or text us at 612-386-3898. Again, 612-386-3898. We have a tool that if you can tell us what your revenue are, we can at least get you in hand grenade range on what those category expenses are going to look like based on our benchmarks. So that might be helpful to you. And if you're interested, please either email us or text us. Again, our full service spend management solutions start at $16,260 in about a week. We will have a lesser service, a small market service is going to be a fraction of this. So if you're interested in something with a guarantee on the ROI side, the StrategicSource program is ready to go. But in about a week, we're going to have a lower cost solution where we provide different levels of help that'll be much more affordable to groups coming out of COVID that have a need, but also have limits on what their financial commitments can be. So check in with us, and we got some pretty exciting stuff coming. We plan to finalize tomorrow. Again, if you're interested in benchmark data, certified suppliers, and sourcing, Expense Edge is the solution. $9.99 a year per location, pretty darn inexpensive, and the opportunity to get a high ROI is pretty strong. Again, if you're looking for more information from us, sales@strategicsource.com. Dan Driscoll D. Driscoll at strategicsource.com. Dan can hook you up with PDFs of this. My contact information, and Chris, our VP of Sales, is there as well. So we appreciate you joining today and participating in this. I guess I want to open it up to questions. Do we have any questions out there in the audience?
We sure do. Hey, Doug, that was great. And this entire presentation was so relevant to what we have going on right now with COVID-19. And I know it was much appreciated by our audience. So thank you. And with that being said, I will jump into some questions. The first one is, where are the dealership's largest cost savings coming from today?
Yeah, good question. I think that's different for everyone, but some of the obvious ones are going to be based on spend. So DMS is obviously one of the largest spend in a dealership. Healthcare, and then you start to get into auto parts, non-OE, the O'Reilly's, the AutoZone. Those kind of expenditures can be pretty high. Then you get into uniforms, credit card, lubricants, categories like that. Telecom can be pretty expensive too, but when you look at supplies and services, that's where they tend to fall. A lot of those are under contract, but again, if you're more than halfway through that contract, and if you have somebody that can provide good benchmarks to you, then you're in a position to possibly renegotiate. Don't renegotiate if you don't have your hands on some good data first, because you don't want to extend another bad deal. So, talk to your friends and 20 group members or dealers in the other your broader group, or see us. We can connect you with benchmarks too.
All right, perfect. The next question that I have is, who in your dealerships are most capable of generating new dealership cost savings?
95% of auto dealerships are decentralized. What that means is everybody, theoretically, everybody can buy. 5% of the dealerships have a purchasing department, which limits the commitment of funds to the purchasing people. So let's look at the decentralized group. 95% of dealers tend to be decentralized, which is very unusual. Most businesses in the United States have centralized purchasing groups. Well, why do dealers, how do dealers navigate this? Well, they decentralize it. So the CFO will usually handle the high volume or high expense financial categories like insurance and maybe DMS and credit card and credit bureau. The fixed ops directors or the service or parts managers will oftentimes take on categories such as facilities or any automotive related. Oftentimes an office manager or controller will handle the office supplies, the print, and some of those categories. But here's what happens. If they don't know what the whole, and I should mention too, the CEO and sometimes the CFO get involved in all the marketing expense. The marketing expenses in a dealership will usually represent 22% of the spend. So if you got $5 million in spend in supplies and services, probably $1.2 million is going to be in marketing alone. And the risk is that when everybody's in charge of purchasing, nobody's in charge. So somebody in the dealership, and it's probably going to be the CFO, needs to come up with a list of the 130 categories and say, okay, boys and girls, Sue, you're in charge of this, and Bob, you're in charge of that, and Mark, you're in charge of this. But somebody needs to be assigned to those categories. They'll do a decent job if they can get some benchmarks, but somebody has to be assigned to them so that categories don't go unattended. That makes sense?
It makes perfect sense, yes. Okay, next question. In your opinion, what's the best way to negotiate lower prices with your suppliers because of the pandemic without damaging relationships with those companies?
A smart politician once said about 40 years ago, partnerships are important, but trust your partners, but verify. That was one of our presidents, Reagan, back when I was a much younger man. But I hold that same position with suppliers. There's a lot of supplier relationships out here that you have that may be 5, 10, 20 years. And I don't think those suppliers are necessarily trying to cheat you or hurt you, But things get sloppy, especially in a decentralized purchasing environment, and prices can get out of whack. So in answer to your question, the best way to check in on those is to go out to quote periodically. You know, maybe we saw this the other day, that healthcare example that I gave you. A broker had been in place 5 years and was a trusted friend and of senior management. And you have to ask yourself, why would $1.3 million be available in a cost saving opportunity when you have a trusted friend that is your primary supplier? And I think the point is that when you go out for a quote and get competitive quotes, you find out what truth in the marketplace is. And you can bring those results back in a non-threatening manner to your supplier partner, your friend, your relative, whoever that is, and say, look, I love you like a brother, or I love you like a sister, but here's what the marketplace is doing. Let's adjust our pricing. You don't have to be the cheapest, but at least get me in the right zip code. And I've seen that a lot. You know, we go out to quote, and dealers or clients, whatever the industry, won't necessarily take the cheapest vendor and break the relationship, but they at least get their partner or vendor to reduce costs to at least get into some sort of competitive range. And again, the best way to do that is an RFQ, where you're testing the marketplace and you have data points coming from at least 3 or 4 positions to back up what you're asking for.
Great answer. Great answer. Where should a dealership start in an effort to reduce costs of services and supplies?
Well, I'd say the first thing is do a spend analysis, and what that is let's go back and build a plan that has the right data behind it. So the financial folks should be able to look at vendor spend over the previous 12 months, total vendor spend. And I'm not looking at charitable contributions or government, but anything that's related to a supplier for supplies and services. Look at that spend, get it into an Excel document, and then code it. You know, anybody that's office supplies, code them OS. Anybody that's auto parts, code it AP. But code every line of that, and usually you'll have the GL line in there as well, so you code it appropriately, and then sum it up by groups. And then you can turn it into a sourcing plan. But that is the best way. You want to focus on the biggest expense categories first. And then you want to find out, well, do I have a contract that's limiting this? Well, maybe you do. So maybe you put that one down the list and you do that 6 months from now. But you have to start with a plan. Otherwise, it's just a purely tactical exercise that isn't really going to throw off a lot of savings. So a strategic spend map is the best tool. If you're interested in we obviously don't have your data, but we can give you a template that has the categories in it, and then it's up to you to either grab the data and code it and populate it, or you can hire us and we'll do it for you. But that plan, I think, is central and paramount to anything you do, and will kind of guide the steps of your team in terms of identifying where the opportunities are.
Perfect. I think we have time for one last question. We don't have many price benchmarks for comparing pricing. Where do I get those?
Well, there's a number of ways to do that. One is if you have multiple stores in your group, grab them in a particular category and ask them for their pricing, and you can get benchmarks that way. Another way to do it is if you're involved in a 20 group, maybe you collaborate and say, okay, guys, next time we meet or next time we talk, We're going to look at credit bureaus, uniforms, and credit card processing. So everybody, put a copy of all your statements together so you can see what the pricing is and who's got the best price, and you'll be able to find out, some benchmarks that way. The best way to do it. Well, the third option is really hire us. You can do that. We've got a lot of benchmarks out there, but even our benchmarks are only as good as the latest quote that we run. The best way to get the benchmarks is to go out for quote. It's time consuming, but that way you find out what's going on in the marketplace today, not last week, not 2 months ago, but today. So internally, externally with 20 groups, you can use us or other suppliers that are willing to provide benchmarks. But the best way to do it is to run your own quote and get fresh, relevant data.
Thanks, Doug. If you've enjoyed this webinar today and feel it would be beneficial to someone else in your dealership, good news, we have been recording it. Everyone will get a thank you email from me for attending the webinar. Just simply reply to that and I will make sure to get you a link and share it with you so that you can pass it around your dealership. Also, I just want to encourage you to tune in for future webinars. You can get information on that on all of our social media or on www.autosuccessonline.com. Thank you, Doug. Thank you to our audience. Everyone have a great afternoon and we will see you next time.
Thank you, everybody.